What is up, you guys? Welcome back to my channel. Nikki here, and in today's video we're going to be talking about if JEPI is worth buying right now, and you already know the drill. Let's get it.
Ooh, big bag. You not talking money, you can miss me with the chit chat. I'm not with the rah-rah or the rip.
Alright guys, so every time that I saw this ticker pop up, I wanted to say JEPI, and I feel as though people call it JEPI, but it's JP. I think it's JP like JP Morgan, because that's like what it is. So I feel pretty dumb, to be honest with you. Let's see what Siri has to say. Hold on. What is ticker JEPI?
JP Morgan Exchange Traded Fund Trust. JP Morgan Equity Premium Income ETF didn't change much today, closing at $61.73.
Okay, well that didn't really answer how you say it. So if you let me know, can you leave down the pronunciation below? I think, like, I don't know, I'm a fool with this. You guys already know I'm real bad with spelling, geography. So if you could just let a girl know. I've heard a lot of different ways to say this, so I don't want to act a fool, but we're just gonna call it JEPI. And I feel as though JP makes sense because it's JP Morgan, but that doesn't matter. We're gonna talk about if it's worth buying and adding to your long-term dividend portfolio today. And quite frankly, this is gonna be kind of a casual look at it. I haven't done a deep dive into it, but from what I've kind of gathered, I'm pretty into it. What even is this? Okay, quite frankly, it was kind of nowhere, and then all of a sudden people really started talking about it, showing a ton of interest in this one. I can see why, but let's go ahead and I'm gonna pop up on the screen for you what it is, but I'm gonna read it off here so I don't mess it up. So it's the JP Morgan Equity Premium Income ETF. I'm already tired. It's an actively managed fund that generates income by selling options on the US large cap stocks. The fund invests in S&P 500 stocks that exhibit low volatility and value characteristics and sells options on those stocks to generate additional income. JEPI was launched in May 2020, so there's a limited performance data available. The written call option should provide the fund with additional income, but may mean that JEPI will miss out on full gains from increases in the underlying portfolio. Ultimately, an actively managed fund is a bet on the manager's ability to perform the market, which I have talked about before with these funds and these hedge managers and these kind of guys and girls, because you're really investing and putting your hope into them because they're managing this for you. That's why there's management fees, expense fees, stuff like that. We'll talk about that in a minute, but let's get back in here. So JEPI offers a hedge fund-like strategy in an ETF wrapper, and investors and advisors should consider whether JEPI is suitable for their objectives. It's quite reasonably priced for what it offers. So now, just like any other ETF, I want to know what is being held in this fund. Like, what do they invest into? And so I'm gonna pop up on the screen the actual Excel spreadsheet for this, and obviously this is just like the top of it. There's a lot more. You can see it up here based off of the market share. So let's go down here past all these XP ones and all that kind of stuff. Let's go to the actual stocks that I see that they have. So we have things like Microsoft, we have things like Target, Eli Lilly, Google, Costco, JP Morgan, obviously Amazon, we have PPG, Nike, Dollar General, Procter & Gamble, Pepsi, I freaking love it, AbbVie, we have Coca-Cola, Hershey's, Comcast, Visa, T-Mobile, just based off of that little bit alone, because like I said, there's a lot more. And you guys, you can always get these, well, not always, I shouldn't say always, I don't know for sure, but on the actual website, when you look up the ETF through JP Morgan, they provide you this Excel spreadsheet. So you can pull it up, you can look at it, you can see what's being held, you can see how much they own of it, and like all that kind of stuff. So check it out if you want to. But another thing that interests me is the sectors. So what sectors do they hold, and what percentage are they invested into what sectors? So if we look at this image right here, you're gonna go ahead and see that information technology, other, whatever that is, industrials, healthcare, consumer staples, those are really, really high on the list for this ETF, which I think is actually really, really good. I'd like to know what the other is because it is such a big percentage of it, but I think that's probably broken down into many other things. But the thing that I find interesting here is how low energy is. I think that's pretty eye-opening for where a lot of people think that we're going to be going in the future. And also, I think it's pretty eye-opening here that real estate is as low as it is, because quite frankly, I'm obsessed with real estate and I think it's one of the best investments you can possibly make. Granted, I believe that to be true for residential real estate and also more like warehouses, industrial type real estate, which if you missed the last video that I did, I talked about the absolute best REIT that I feel like people are sleeping on or don't take that seriously. And I'm gonna go ahead and link that down in the first comment so you can check it out after this video. But I found it just to be pretty insightful as to what I'm seeing in this fund. And you guys, I know that spreadsheet might have been a little bit confusing because it's not really broken down by percentages. So I'm gonna go ahead and throw up this image for you. And you can see outside of other securities and other mutual funds that this fund invests in, you can see the major holdings here for them, the top 15. So with things like Microsoft, Target, Google, Eli Lilly, all the same ones from the Excel spreadsheet, but it's going to be in 8%. So it's a little bit easier to digest. Anytime you have like an ETF, something like that, that's managed by somebody else, like I mentioned before, you're going to have something called a management fee or an expense ratio, or basically a fee that you pay because it's being managed by other people. This ETF has a 0.35%. Now, relative to the kind of the other ETFs that you can buy in this kind of sector, this kind of market or whatever, I mean, whatever. Okay, there's some fancy words, but relative to its competition, you can see right here, 0.04, 0.03, 0.25. So it's very interesting, and holler to my favorite, one of my 3 favorite ETFs, SPYV, making the cut here, okay? Because I just love them and I feel like they should be highlighted more than they are. But anyway, you can see here, relative to the alternatives in the large cap blend equities category, it is a little bit high. But you guys, you invest into this fund for the dividend, okay? Let's talk about it for a second here. Now, this is a monthly paying dividend, which right off the bat is going to be extremely appealing to a ton of people, me included, and it's at a 7.66% yield. But check this out. So on this image right here, you're going to see the last payments throughout the last year of this dividend. And quite frankly, it's a little bit hit or miss. It's a little bit inconsistent. They just paid out, I believe, around 26 cents, but a few months ago, they were paying 40 cents. And then a few months before that, they're paying almost 60 cents. So it is not the most consistent thing I've ever seen, but that makes sense given what it is and what they do with the options, with all the different holdings they have and when those pay out and all that kind of stuff. So it makes sense, but it is good to know that it's not like you're going to get X amount per share per month. It does fluctuate quite a bit. And here's another image that you can go ahead and kind of glance over, pause it if you want to, but you can kind of see actual numbers of what they paid out in these months versus just the bar graph. I guess the good thing is they do pay one. So that's pretty nice. And it is monthly. So there you go. So based off this information, do I feel like it's a buy? Would I buy it? Yes, I would. Actually, I'm very interested in adding it to my dividend portfolio. But after I really dove into that spreadsheet that they provided with all their holdings, I really noticed I invest in a lot of these companies. I obviously don't invest in a ton of them because they do have a ton of holdings. A lot of those heavy hitters, like their top 15, like I own a good amount of in my portfolio, and I'm going to continue to add more to it obviously down the line. But for me, it's kind of like, okay, I believe in what they're investing in because I personally do it already. I love the monthly paying aspect of the dividend, even though it is a little wishy-washy, okay, a little bit confusing, a little bit, you're not sure exactly what you're gonna get, but you know you're gonna get some money. So I do like that. And I really like the whole options idea of this, the premium money that they're getting. I think that's a good twist on this. Just think it's something that's going to return pretty decently for the investors. So I feel like this fund, actually, if I really think about it, this fund may be better in someone's like Roth IRA for tax reasons. But either way, I feel like if you're a long-term, and that's the keyword, a long-term dividend investor, I feel like this being added to your portfolio for some monthly income is ideal. It's key, and I really like this. And quite frankly, I wasn't 100% sure exactly how they were using that funds or what they did with the option, like how that worked. And so I found something that I'm gonna have to read verbatim because otherwise I won't know what really it's going on. But to kind of help me understand, I found this. So it says the fund also employs the use of derivatives to generate income. While the strategy has similarities to covered calls, also known as buy right options program, JEPI technically invests in quality linked notes, ELNs, which are structured to capture the economic performance of written options. So from the fund, basically they're saying in order to generate income, the fund may invest up to 20% of its net assets in these ELNs. They're structured as notes that are issued by counterparties, including banks, brokers, or the affiliates, and then designed to offer a return linked to the underlying instrument within that ELN, that note. So ELNs in which the fund invests are, this is like a foreign language sometimes, honestly. We have to dissect this. Okay, we gotta like autopsy this. What does this mean? Damn. ELNs in which the fund invests are derivative instruments that are specifically designed to combine the economic characteristics of the S&P 500 index and written call options in a single note form. So that's how we merge it. The ELNs provide reoccurring cash flow to the fund based on the premiums from the call options the ELNs writes and are an important source of funds returns. That's kind of the breakdown, and that's that. And like I feel like I understand it a little bit better. I had a lot of people throwing it at me, so I wasn't 100% sure how I felt about it, but after this research, I'm definitely going to be adding it to my dividend portfolio and put a decent amount of money in there when I can, try to heavy load it so I can get that monthly income up a little bit more. Do you guys own this? Do you even, I'm sure you've heard of this. Okay, I'm probably late to the game, but I want to know if you guys own it. Let me know down below. Also, if you could, you guys smash a thumbs up for your girl. Okay, if I've earned it. Okay, I did a little research on this when we brought out the thinking caps. Okay, we brought out education. So if you could, smash a thumbs up. Also, if you're not yet subscribed and you like investing, making money, and having a good ass time, you should consider subscribing because that's what we do here. And like always, guys, enjoy the journey, whatever your journey is. Always remember to do it, set your hearts on fire, and I will see y'all in my next video. Bye, guys.